Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, financial markets are now more convinced rate cuts will be coming in 2024 as inflation transitions away. First up, we should note that the US Fed came in a little more hawkish than markets had expected in today's FOMC meeting, but they don't seem convinced inflation is under control yet, although they did abandon formal guidance that had kept rate hikes on the table. The ADP employment report showed private businesses in the US added 107,000 jobs this month, below core forecasts of 145,000. It also showed that the pay premium for those switching jobs is now evaporated. This is the report that comes just before the US non-farm payrolls report for January that is due out this weekend. That is expected to show a gain of 180,000 jobs in the month, although analysts have consistently underrated the strength of the US labour market recently. And China's official PMIs for January were out yesterday. The factory PMI was unchanged, maintaining the December contraction. That was their fourth consecutive month of decline and the ninth in the past 10 months. But their services PMI expanded slightly more than in December. The services sector never has slipped into contraction in these official surveys. So overall, these surveys record a slight expansion in January. Inflation in Germany fell below 3% in January to its lowest since June 2021. Lower costs of energy enabled a drop to 2.9%. Without food and energy, their rate was 3.4% and also its lowest since mid-2022. And Australia's inflation rate came in lower than expected at the end of 2023. Their quarterly CPI was 4.1% from a year ago, a two-year low, and well below the 5.4% in the third quarter. Markets had expected 4.3%. And their monthly inflation indicator for December alone came in at 3.4%, a big drop from 4.3% in November and well below the expected 3.7% analysts were expecting. Both are substantial shifts lower and paint a picture of fast easing price pressures. These results sparked a rise in local equities and a sharper fall in bond yields as markets start to price in a 25 basis point cut in official interest rates by August. The US Treasury 10-year yield starts today at 3.98% and down 10 basis points from this time yesterday as bond markets start pricing in anticipated Fed rate cuts. And the price of gold will start today up another $15 from yesterday at just on $2,050 an ounce. But oil prices are down $1.50 at just over $76.50 a barrel in the US, while the international Brent price is $81 a barrel. And the Kiwi dollar starts today at just on 61.4 US cents and 20 basis points firmer than yesterday. Against the Aussie, we're also up 20 basis points at 93.1 Australian cents, against the euro at 56.6 euro cents and a touch firmer. That all means our trade weighted index starts today at 70.3 and up 10 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.